Ladies and gentlemen of the crypto space, we're back and in living color. Some fancy old school nostalgic metaphor like that. I was off yesterday, got some family things I got to take care of, but it's all good. I got my mind right, and we're doing what we have to do. That's the way we do things. Thursday, 11:34 a.m. on an April 29th, almost the end of the week. Federal government wants to print cash. It's all good. I would argue they should actually print cash, like dollars, instead of the reserves shell game, which they call QE, quantitative easing, to print some damn cash if they want inflation. The problem is the government has no capacity to manage deflation. The inflation they could trigger, but also the problem is wage stagnation. So talking about the legacy financial system it's very difficult, and it's a tragedy. And the disparity is worse than ever, which is exactly why I take great pride and passion in the content that I deliver on the stream and now on Noah's Real Talk Discord forum. It's making a difference. It's allowing people to explore and be exposed to life-changing type of financial experiences, while now we're encouraging people to think about risk. No one talked about risk in the crypto space. Nobody talked about this 1718. No one talked about this. In 1718, it was buy whatever you can, to the moon, rockets, and all that fancy bullshit that every silly YouTuber likes to talk about. Not on this YouTube stream. We don't do that. Sure, there's excitement. We got a technicals channel in the forum. There's plenty of opportunity. Right now, we're obviously focused on Matic because that's the monetary velocity. Critical mass monetary velocity. It just started, and Abe has 1.7, $170 million or something. We'll take a look. We'll pull it up on the screen and see what's going on. Let's dive in. Follow the monetary velocity, where to look and when. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. We got a lot of people in the house today. Cool. Captain Weber's in the house. Always a pleasure. Always a pleasure. Jeremy, Vortex, James, at work. I appreciate that. Byway, what's good? Jeremy, welcome back. Noah, thank you very much. Thank you very much. Winter in training, sub family. Got a little family going on. It's pretty cool. Group of people, same mindset, same ideology, want to do things different. Damn right, we're gonna do things different. Gonna watch it go straight up and come straight down. No more selling to US dollars and putting it in a bank account. That's what we did in 17 and 18. That's not gonna happen this time. DeFi is a whole new ball game. You got crypto dollars and you got crypto dollars that work. Put your capital to work so you don't have to. Money actually works. This is something that we historically did not have. We did not have a way to put cash to work without being exposed to a volatile risk on asset, watching it go up and down. But now we could earn yield, percentage gains, and grow our yield. Folks think about how much their asset is worth. Oh, it went up 100%. Yeah, it's not sustainable. It goes up, it goes down, it goes left, it goes right. It goes all over the place. But if you're earning 20% on your money, and you're able to work, regular work. You go to work, you get a paycheck, and you're earning 20% of your money. You could save your money, and your money's actually working. So at some point, your money could do work for you instead of you doing work. Focus on the yield, folks. You want more and more yield. And we take strategic risk-on bets only when it's the right time. When the opportunity presents itself, there's an obvious technical setup, or when monetary velocity is flowing, which, really the technical setup is going to be supported by the monetary velocity flowing. You'll see the opportunity present itself. You'll see the breakout, the resistance flip support, and the higher high. And boom, that's how you turn some capital into more capital to dump it into yield-bearing positions, which you grow to put to work. Lewis is in the house. Always a pleasure. Thank you very much. Dr. T, my man, he jumped in the forum. Dr. T is stepping it up. Everyone is stepping it up, and everyone is helping everyone because, I'm pushing this movement, but we all can help each other. And it's not that everyone has to help each other, but the real deal is people are struggling. And people are, and the outlet and the way people are venting is by taking risk. People take a risk because they're struggling, they're frustrated, maybe even depressed, they want to get ahead, they don't make enough capital, they don't see a path, they don't see an opportunity, they don't see a way forward. So people don't have to help other people, but I like to think for the exact same reason that I'm doing what I'm doing, everyone that joins the forum is able to help other people. And there's not necessarily capital or money involved in that. You can help yourself by discussing and dialoguing and having these types of conversations. But there's something really meaningful about helping other people. And interestingly enough, other people need help whether they admit it or not. We all need help to do better because we can do better. The Great Gatsby, a Discord. Yeah, we got the Discord. I got this morning. If you go through my Twitter feed, I threw a coupon code up. It's the same coupon code that was available, all week. It's just an everlasting coupon code. It's a one-time use coupon code. Everybody, I'm just saying it is what it is, and that's what we got. We got a little family going on. It's really cool. Michael Voll is in the house. Always a pleasure, brother. It's been a while. Hope all is well. Really do. Lewis says, where is the velocity? The velocity is Matic. We're on the main screen. Let's do this. I mean, Ave, seriously, I got a fat Matic position. What is that really $1.79 billion? Critical mass monetary velocities can facilitate FOMO for developers to capitalize on this liquidity. This liquidity is sitting here. People have a capacity to borrow. When you borrow against capital, that's value creation because now you have a debt and a liability, and it just increases value. Basically, the using was it what do they call it, double accounting standard, or and that's basically the way traditional finance works. And the same concept is applicable. Double entry bookkeeping. That's what they call it. So there's a debt on the books of the lender, but also a liability on the books of the borrower, or the reverse. Point being, it's value creation. It's the way the legacy financial system works, and it's basically why M2 monetary velocity is imploding. But the difference is in the DeFi space, we got nascent financial systems that are growing. And when you have a capital inflow from trivial amounts of money to $1.78 billion, that's going to drive significant encouragement for productivity. The DeFi protocols are porting as fast as they possibly can because they got FOMO to capitalize on this liquidity, and that's going to draw in more capital. That's going to drive more development activity, and that's exactly what happened with Binance Smart Chain, and that's exactly what would happen with Ethereum. This is the deal. I'm not telling people to make too much of a bet on Matic, but this bad boy is 31 in the total market cap. 86 cents. It's at 5 bill. I mean, this thing's going. It's going to go 10x to 50 bill. It's going to catch up to BSC. But you still play it smart. You're in this channel. You're going to be restrained. You're going to be restricted. You're going to play it right. You're not going to put 50% of your capital in there. You're going to put a logical amount. And you're going to watch the technicals. If you're going to play a risk-on position, you're going to watch the technicals. And it just so happens the technicals for Matic are positioned for a nice break to the upside. This is not bearish. If you look at all the time frames, you're going to find all the moving averages pointing up. And RSI is going to be misleading on the weekly and the monthly, albeit on the weekly. Incredible that the Stoke RSI is not overextended. Wow. Usually Stoke RSI is misleading. Excuse me. So RSI is not misleading. Stoke is a derivative of RSI. So I would argue that on the 4-hour, this looks incredible. I mean, Stoke RSI has completely bottomed out. RSI is just about 75, which is incredibly bullish territory in all technical standards. MACD looks like it's going to do a skim, like a rock skipping off a lake. And it already breached the upper threshold of what I would say is a pretty solid ascending triangle. It was a failed breakout attempt. You got a clear series of higher lows. And when this thing rips, bam, it goes from whatever it's at, 90 cents at the ceiling, dollar, $1.10, and it just rips, and it'll just keep going. So what you want to do is capitalize on a technical breakout, accumulate dollars. You're putting it into Aave, you're putting it into Curve, which is generating more Matic. And as a new technical trend formation forms, you have to capitalize on a breakout. If you could turn 1% of your portfolio into 10% of your portfolio, you're changing everything. Changes everything. Now, clearly, I don't expect it to go 10x overnight, but if you could get 30, 40, 50% in a clip because crypto assets rip 30% in a clip, there's some good opportunity here. But be rational, be smart, be different, be restrained. Do things differently and you will grow your portfolio. You don't need to make as much money as possible. What you want to do is make more money over time in a risk considerate fashion called risk adjusted returns. Streams are getting better and better. Thank you, Michael. I'm trying. It's pretty good. It's been a heck of a year, my friend. Winter in training. Sorry for the ignorance, but where can I find the Discord link? Twitter. Look at my Twitter feed. Maybe like 2 tweets ago, 3 tweets ago. You can't miss it. Even has a coupon code for everyone for a free week. Josh is in the house. Always a pleasure. Fabio, good morning, everyone. Evening, everyone. Yeah, we got a whole worldwide crew going on. I have right now it's 11:45 for me. I know it's a lot of folks in like New Zealand. It's probably the middle of the morning for them. Some wonderful people that I've been talking to in my office hours. I I'm quite surprised on the amount of interactivity and appreciation that's going on for being different and doing things not the way BitBoy says to do it. Name drop. Demir's in the house. Always a pleasure. Someone dropped an analysis about Matic being 2 people away from a rug. Okay, so this is important. Yes, but do you really think Matic's going to be a rug pull? A rug pull. A rug pull is degenerate. It's a thief. It's a criminal. You see rug pulls on Uniswap because it's some baby back bullshit. It's some stupid coin. There was a fork of a fork of a fork. Or they just literally just ripped it out of thin air. Matic's been in development for a long time. There's infrastructure. They've been spending time on that thing. It's a serious network that is non-trivial, and it has a potential to be an entire financial infrastructure component. So while that statement is true, what we do is assess risk in that it would be fucking retarded for them to do that. When you're sitting on the verge of a financial network that has critical mass monetary velocity, not only from a technological standpoint where it's significant, but from a financially lucrative standpoint where you have a business that's an ongoing revenue stream of capital investors and venture capital and just really a significant revenue. It would be absolutely insane for that to play out. So while that's true, um, it's far from a Uniswap piece of garbage, pancake or whatever the hell you want to call it, some silly Uniswap creation that has historically been part of rug pulls. I haven't heard of a single rug pull on Ethereum in God knows how long. Have you? Has anyone heard of a rug pull on Ethereum? I don't operate in Binance Smart Chain. Clearly, that's an absolute shit show. I don't care. It's just not on my radar at all. But I haven't heard of a rug pull on Ethereum. I just can't. I just can't think of a single one. But we're not in DeFi summer 2020 anymore. We're way past that. We've achieved critical mass in countless regards. Kristen, Noah, how much do you over collateralize your MBTC loans on Maker? I'll show you. Close. 393%. I'm taking no risk. Bitcoin is invaluable. I want to extract the equity from the capital, put it to work, but I will not jeopardize my principal no matter what. So if I could put some of it to work, that's great. It's better than putting nothing of it to work, but I'm going to protect my incredibly valuable BTC in all regards. Yeah, you could have that whole conversation about custody and so on and so forth, and you want your keys for your Bitcoin, but putting capital to work is meaningful, and you really have to weigh that analysis because Putting capital to work is the path to financial self-sovereignty, economic freedom, where your capital's working and you don't have to. So it's definitely not trivial. While both arguments are meaningful, not your keys, not your crypto, my entire stream starts with that statement. If you're not putting your capital to work and you have stagnant equity, not performing, that's also meaningful. Gravity Dex, isn't that that's Cosmos? Ooh, you know what's going to come out swinging. I mean, you see, the Binance Smart Chain was a foreshadow for what's happening with Matic. The same exact thing is going to happen with Cosmos and various Cosmos hubs. The same thing is going to happen with Polkadot and various parachains. And the same thing's probably going to happen with eGold at some point, Elrond. So there's a lot of stuff going on. And, I don't discount Cardano. I just have absolutely no interest in it until it actually has monetary velocity. The stream today starts with follow the monetary velocity. And if you're not following the monetary velocity and you're applying capital to assets that don't, or particularly networks, money networks, or networks that are intent on being money networks like Cardano with smart contracts and DeFi, and there's no monetary velocity, absolutely zero, you're playing pure speculation. That's all it is, because monetary velocity is the fundamental component of a functional financial system. Unless a financial system has monetary velocity, you're not going to have the churn of capital. You're not going to have the borrowing, the lending, thus the value creation. So you're not going to have the psychologically impacting factors that draw capital in, which basically triggers price appreciation. Follow financial systems. Allocate capital to burgeoning nascent financial systems that are asymmetrically appreciating. If it's not, it's speculation. And who gives a shit about speculating? You can make a fortune speculating, you can lose a fortune speculating, and that's exactly why I avoid it. I have no interest in speculating. I have no interest in putting any of my capital at risk unless there's a really strong narrative behind it. And there's absolutely no strong narrative whatsoever about applying capital to a smart contract network that doesn't have smart contracts. Now, you can clearly anyone who loves the project will say they're going to have smart contracts. Great. I did not invest in Matic until they had critical mass monetary velocity. Define your narrative and stick to it. Follow it. It will make the difference between you making a fortune and keeping it or making a fortune and losing it. When Cardano reaches critical mass monetary velocity, I don't give a shit if it's 10x from where it is. I don't care what the price is. What I care about is the monetary velocity. And I care about the interoperability. And if I could apply capital to it and utilize it and put capital on it to work, great, wonderful. I expect the same thing for Flare. That has a lot of potential too, but I'm not going to speculate on it. I'm not going to gamble my hard-earned money on that shit. Just saying. JD's in the house. Collectively, we are going to be better and stronger. I hope so. I really do, guys. People are really hurting. And even if you have money, the odds are you work a lot. The odds are you're not with your family as much as you want to be. And I know damn well sure I'm not. We have to do things different. And the only way for us to do things different is to help each other do things different and reach out to other people and bring people in and group people together and push them in the right direction. Education, encouragement, support. You know why? Because otherwise it just stays the same. And the way it was didn't work. And it didn't work for most people. So we have to do it different. Lewis, my man, TVL and Matic just went over $4 billion. Why is the transaction volume all going up so fast? My brother, this is the psychological effect of monetary velocity. And if you look at historically in the United States financial system, when monetary velocity is soaring, economic activity is soaring, people are on the streets doing work, doing deliveries, making sales. Business is booming when monetary velocity is booming. All we have to look is to the pages of financial history to understand what's going to play out with these nascent financial markets. It's exactly what happened with Ethereum and DeFi summer. It's exactly what happened with the shit show of Binance Smart Chain. No one gave a shit that it's not decentralized. The opportunity, the velocity was there. And that's what drew people in. And it's sustainable because there's always a developer making some new financial crafty opportunity. And then you get into the novel factor that these projects are creating fiat currencies that have inflation, deflation, and velocity unto themselves. This is very different than 2017 and 18. These folks are creating fiat currencies. Why? Because they have the damn properties of fiat currencies. If it walks and talks like a fiat currency, it is a fiat currency. Inflation, deflation, and velocity. It's the exact same way we talk about legacy financial systems. It's the same way we talk about sovereign country fiat currencies. Winter in training, 100% no, despite media portrays it, people want to help people. What's the purpose? What's our purpose? We all need a purpose, and sure, we could say our purpose is family, or we want money. There's no greater purpose than helping other people, especially people that are struggling. Let's keep it going. I got a lot of commentary, so I'm scrolling the best I can. Greg's in the house. What up, Noah? Glad to have found you, bro. Appreciate it. I appreciate you because you have the opportunity to help other people. And the more people we do that, the more people we get help. Crypto Yogi, it's all starting to make sense. The only thing left to figure out is what is better, awesome sauce or amazing sauce. That's right. The opportunities are everywhere, and you don't have to take the risk. You just have to find, and look, Yearn's great. But there's probably opportunity cost if you have a capacity to have a significant curve position. Because then you could have the curve, experience the VE curve, profit sharing of the platform, and the potential asymmetric returns in that regard in the future, and also achieve maximum boost, whereas all the Yearn V1 pools don't necessarily achieve maximum boost. So it's the difference between awesome sauce and amazing sauce. It depends on the amount of capital you have, and that's okay. Don't play someone else's cards. You're sitting at a poker table. You're not playing someone else's hand. You're guessing at what they have, but in the end, you're playing your hand based on mathematical odds. Same thing with allocating capital. Work with what you have. Don't overextend your portfolio. Overextending a portfolio, leverage, so on and so forth, is how you destroy value, taking excess risk. Wave mappers, I realized when I added to my Polygon curve position my claimable Matic. Yes. No, they don't auto compound it. You have W Matic in your wallet. So if you go over to QuickSwap, you'll see a W Matic position. So that's how you do it. And you can turn W Matic into Matic, and then you can restake it on Aave or do whatever you want with it. I realized when I added, I just answered that. Thoughts on Visor, high trend formation. Maximum risk, maximum reward. I don't know, I got like 30 grand worth of it. A small percent of the portfolio. I shouldn't say numbers because what's more important is percent. Play your hand. Play your hand, not the hand I have. So it's about 1% of the portfolio. 1% turns to 10%, you change your portfolio, please. 6 p.m. in Italy. That's right, Fabio. It's a whole big world, and I wish we could help more. So spread the word, and we can make a difference together. Jeremy in the house. It is normal that Aave does not show the API word for Aave token, or is there even a word for depositing an Aave? So if you're talking about Aave V2, then there's no reward. So there's only reward for assets that are collateralizable. So there's no reward for any of these that don't say it. There's nothing. You're going to get nothing. So there's only reward for WBTC, Ethereum, Gemini, dollars, USDT, USDC, and DAI. That's where you get your Aave reward. Bear in mind, there is significant opportunity cost associated with these positions, particularly because, it's better on Matic. It's better on Polygon. So it's while don't overextend yourself if you're not comfortable with that type of play. Get your yield. Your capital needs to be working, but it's better elsewhere. So that's exactly the definition of opportunity cost. About way in the house. Sushi was the last major one, but that wasn't a full one eventually. Well, sushi is a facilitator of liquidity. That's not a monetary network. That's worthwhile to mention. Um, Sushi's actually decent with a decent monetary policy. They're getting crafty since being acquired by FTX, and they're doing things different. So I think there's going to be a value prop for sushi. There is a value prop, but it's not something I would allocate significant value to. Frankly, I wouldn't allocate significant value to Uniswap. There's too much opportunity cost because if I had a large Uniswap position, how the hell am I going to put it to work when I could get 50% of my money on Aave on Polygon? That's the wrong allocation of capital. I want the maximum amount of return for the minimum amount of risk. So if I could deploy cash and get a return, it changes everything. Let's keep it going. Arf says, what are your thoughts on possible being within a super cycle? I don't think about it at all, and I'll explain why. Uh, when things went bearish back in 18, people were selling for dollars on centralized exchanges. What the heck are you going to do with dollars on centralized exchanges? So people exited that capital off the centralized exchanges, which triggered the momentum and the cascade of liquidations and the value exiting the crypto space. This time is different. There's no need or reason or logic whatsoever for the capital to exit the DeFi space when I could take my cash and say, hey, degenerates, do you want to borrow my cash and pay me interest? It's not going anywhere this time. So that's why it doesn't matter if it goes to the moon because the cash will stay here. If you made it through 18, you found yourself in a self-sustaining system now. You watched in 2020 Ethereum achieve the first historic. Um, uh, you watched the first historic achievement of a novel financial system occur in the digital space, um, involving a capacity to create novel fiat systems, and that's what's going on. That's the real deal. My narrative link is blockchain agnostic. We continue towards multi-chain functionality. Oracles will become more and more important and comfy. Sure, your link better be making money. I like Link. I think it's a systemic infrastructure component and it's invaluable in all regards. But if you're not making 20, 30, 40, 50% on your Link, um, you got a lot of opportunity cost and you're missing out. So watch your position size. If you think Link's going to do a 10x, great. Throw 2% of the portfolio. If you're super bullish, throw 3%. Turn 3% into 30%, you change your life. But if 30% of your portfolio is sitting in Link, you're losing out on the most important thing that DeFi offers, which is putting assets to work, where you could get a weekly revenue stream just like you do when you trade time for money. You get a salary at the end of the week. And everyone wants a raise. You go to your boss, you get a raise. In the crypto space, you could actually get a raise every single week. It changes everything. Lewis, my man, is QuickSwap moving on its own fundamental merit, or is it piggybacking on the surge of Matic? Both. So there's a lot of LP positions, and there's a lot of incentives, and it has a very restricted monetary circulating supply, which is really cool. I think it offers something unique with regard to an investment opportunity, and I think it's going to keep appreciating, riding exactly the narrative of Matic. Was it Quick USDT is you can't even buy it. I can pull up the charts elsewhere and probably this is a great website, by the way, guys. Dex Tools. Keep my eye on Mist Method Advisor. Excuse me. Pretty cool. I got a position in all of them at this point. Small positions, 1%, 1%, 1%. Boom. Done. I'm not thinking about it. I am not thinking about it too much. If you've allocated too much of a position size and you're worried, if you're thinking about a position and you're worried you're going to lose money, you've over allocated. Always remember that. Wave Mappers, awesome. Much appreciated, my man. Always a pleasure. Sir Joe's in the house. Yes, sir. Um, Kristen, Noah, thank you so much for all your sound advice. When you talk about office hours, doesn't mean we can call you personally in the forum. Not in the forum, but I have my office hours. If you go to, which I'm not available as much as I'd like to be, but if you go to my profile, you'll have my daily stream for YouTube. You'll have my Discord link right here. And this is to sign up. It is $10 a week, and is in my here. Look, in my feed. Here's the coupon code. So screenshot that bad boy, and you get your first week free. And I have office hours, so you guys could call me directly, and I'm more than happy to help to the best of my abilities. I've talked with a lot of you guys already. Dr. T knows the deal. A lot of people on the stream today know the deal. Captain Weber sent me some lobster tails one time. I'm just saying that was nice. Lewis is serious. He's awesome. Lewis is a good guy. Listen to him. He has a lot of experience, and I swear, experience is everything. That's what parents always tell their kids. I'm a parent myself. We don't know everything. No one knows everything, and that's the point why we group together and gather in our forums and our this YouTube stream, because we don't know everything, but experience is everything. And if we share our experiences, we grow collectively and we grow stronger. Dirty Sanchez. So I take a loan on Nexo with my BTC deposit. I took that into Aave and Polygon and borrow Max T. Oh my goodness. Put that into Curve on Poly. Do you think that's too much risk? Okay. I wouldn't do it. Everyone needs to assess their own risk tolerance. And that's for only you could decide. I don't know. I wouldn't touch at this point. I would not touch Nexo, Celsius, or BlockFi. I would not give them my capital. Period. Because I control my capital on MakerDAO. Whereas on those centralized platforms, they rehypothecate. They're taking your capital and lending it. Whereas MakerDAO is a 100% reserve bank. They're not lending your capital. Your capital is here. 100% reserves. This is a banking framework unlike anything in the legacy financial system. And it's available to you permissionless, no questions asked. And did I say 100% reserves? Also, big respect to your channel, most valuable on YouTube for sure. Thank you. I really appreciate it. I really do. Try to make a difference. Trevor's in the house. Peace. Good stuff. 70 people in the stream, 29 likes. We can do better. 12:07 p.m. on April 29th, Thursdays. Nothing special to look at. It's bearish because they're inflationary. All three of them are just getting hammered because there's emissions and there's no deflationary pressure. XTK should be up here as well. That's good stuff. It's the same thing. It's inflationary and there's no deflationary pressure. So, but look at Curve. Curve was high inflation, and then the deflationary pressure kicked in and experienced 1,000% appreciation from its lows. So these are speculative bets. There's a lot of risk on the table, which is why if you apply 1% of your portfolio to 3 or 4 positions, you have a limited downside and you have unlimited upside. So position size makes all the difference with regard to your risk on plays and your peace of mind and managing your anxiety. 1% to 10% on 4 assets changes your life, not just your damn portfolio. So don't overposition. Don't take excessive risk. And I think the narrative, I'm back on point where the narrative for all 4 of these assets, I think, is reasonable for a risk on play. What's 4% of your portfolio? Just saying. So don't take excessive risk, and you could apply capital to risk on plays because the narrative for the 4 assets is pretty cool. Pretty cool. Still on the UniV3 narrative. I'm actually applied pretty heavily to Matic at this point because it's a much larger macro narrative of monetary velocity, and the chart just looks ridiculously good. I mean, look how long it's been held at oversold on the Stochc RSI on the 4 hours, a decent time frame. I think this is just a classical compression. And other folks look at technicals very differently. I tend to look very simply. I'm not too sophisticated. But what I see is a very obvious trend formation. What I see is it's adhering to support, and if it failed support, you liquidate at a loss, and you could lose a lot of money. But the rest of the portfolio is supporting this position, meaning if I'm down, I lose like 50 grand, 100 grand, the rest of the portfolio is going to support it. And if it breaks out, and I can make 30, 40, 50% on a relatively large speculative bet, dump it all into cash and throw it in the curve, then I get Matic for free. You see what I'm saying? So be very strategic with your risk on plays and know that if you're playing something based on a technical formation, this is the only asset right now I'm playing with technicals. I don't have the time to watch a billion charts. So you don't have to watch a chart if you applied 1% of your portfolio to a position. But if you got 15, 20% of your portfolio in a risk on position, you're going to watch it. And you know damn well if you got to break down through a trend support, you're going to experience a capital loss. And if you break out, you sell. And you wait for a new trend formation to play a breakout. I mean, look, this rips to the upside, Stoke up to overbought. You know that's going to like $1.10, $1.20. I mean, if you look here, check it out. You know, history doesn't repeat itself, but if you look at the price appreciation from previous oversold to overbought, it's 216%. And that's the cycle, the Stoke RSI cycle from oversold to overbought. So it's not guaranteed to play out like that, depending on how strong the monetary velocity affects people's emotions and psychology. But if a rip from oversold to overbought takes us another 200%, woo, Big Daddy's going to sell that for cash. Curve's going to get a deposit, and I'm going to build a Matic position for free. I'm going to take the risk off the table so I could sleep better at night. It's the name of the game. They can freeze your account at any time. I don't trust centralized anything. I was just about to ask about selling some BlockFi, also the USD Circle business account. I don't trust anything centralized, my friend. Are you compounding back into the pool or holding Matic until appreciation? So I have a lot. So right now I have a relatively large Matic position. I'm waiting for a technical breakout. I am prepared to take a significant loss. And I did yesterday because I sold like an idiot. But whatever. If it breaks down through this trend line and bullishness becomes bearishness, we are bullish until we are bearish, I will liquidate and I will lose a large amount of money. If it breaks up and I'm able to capitalize on upside, I'm selling. And it's going into curve in dollars. And I'm going to rebuild a significant Matic position for free, taking no risk at all because there's just dollar principal. Be rigorous and have conviction and stick to your rules. People have said that, but on this stream, we've actually talked about decent rules that other people can subscribe to. It took me 4 days to get my shit off BlockFi. See, Dr. T? I know. Never going back, and they keep lower rates. Nexo isn't as bad, in my opinion, but DeFi is just better. Took 4 days to get your capital out. It would take me about 6 minutes to pay back this debt and take out my Bitcoin. And I didn't have to ask for permission, confirmation, approval. I didn't have to do anything but click a couple of buttons to take my capital out. Ryan says, in May 1933, FDR outlawed all gold coins, bullion, and certificates, making them owned by the Federal Reserve Bank. In June 1933, they backed USD by gold standard. Could this happen again with Bitcoin? Anything could happen, but I'm not going to sit here and wait. I'm not going to sit here. That would be an opportunity cost. If you're going to sit here in US dollars and wait for the US government to try and confiscate Bitcoin, there's some serious opportunity cost with that play, because then you'd be missing out on all this activity and action and monetary velocity and technical opportunities and yield and gains and work and productivity. Am I going to sit on my hands waiting for something to speculatively play out? I don't wait for speculative shit. I take action today. Capitalize. Put your stuff to work. Since Bitcoin is digital gold, sure, the narrative's cool. I'm not going to make a bet on it, though, my friend. I'm going to bet on some yield and get some 30, 40% today. Todd's in the house. Hey, no, I have been trying to catch you for a couple of days. Have you spoken about NFY? I do not even know what it is, my friend. I do not know. 73 people in the stream, 33 likes. We can do better. One more question, and I'm going to wrap it up for today. You're a big proponent on taking profits to minimize risk, but don't you think it's difficult to time the market? It's not less risky to hold. Yeah, 1% of your portfolio. That's cool. Unless it's Bitcoin or Ethereum, there's no reason for an oversized position. If you take 1% of your portfolio and you're throwing it to something risk on, yeah, you could hold, but just holding for an irrational reason merely because of a lack of a technical capacity to have a more strategic um, risk on strategy, that's not okay. I would very much encourage you to take cash off the table, establish a large cash position, and earn yield on your cash. You need to learn how to make money with your cash, because if you have a very large risk on play and you're hodling, you're going to have to sell at some point. And unless if you're hodling, and well, how about this? If you're hodling and you're making no money in the meantime and your asset isn't working, what are you doing? I mean, if Digibyte, is it making you any money? If you're hodling because you expect it to go to $1, are you real? And you because you believe in decentralization, are you really going to sell Digibyte at $1, or are you going to watch it crash back down to 50 cents because it has no monetary velocity and it's operating on a pure speculative process? And this is no discredit to the fact that I significantly appreciate decentralization and the overall large narrative at play with the asset. Heck, I built the Android wallet. I think it's a meaningful component that can be consumed at a societal level as a public utility. That doesn't mean I'm going to risk my hard-earned money on it. Now, if it achieves monetary velocity and deflationary pressure, the capacity to lend and borrow like a true financial primitive, that changes everything. If you want to you have to look at these crypto assets when you're talking about value allocation as the way we look at the traditional financial system. That's our point of reference because the traditional financial system works. It might be broken, it might be pathetic, it might be self-serving to the wealthy and encouraging of disparity, but it works. So if we look at things from a macroeconomic financial perspective, we can understand how these systems in crypto are going to play out. We look for foreshadows and history repeating itself. It happened with Ethereum and DeFi Summit. Binance Smart Chain. Matic is doing the same thing. Polkadot will inevitably do the same thing. Cosmos will inevitably do the same thing. And Cosmos is tied in with the Chinese digital yuan narrative. I feel bad for people that hodl. Join the forum. Be different. If you're hodling an asset that you believe is going to go up in value and you believe in the narrative so much, and you watch it go up because it's speculatively going up, it's going to come down unless there's a reason for people to hold it. And the only reason for people to hold a financial instrument or an instrument that has value is because it's working. If it's not working, people are going to sell to take the profit. And if you don't sell, a wolf is going to sell. And if a wolf sells, they're going to take your money. So I appreciate decentralization more than anyone as an engineer, passionate engineer. But they're going to take your money. Look, Polygon ripped to 92 cents. Then it fell back down to 86 cents. People's money was taken because lack of skills with regard to technicals. And I guarantee you someone bought at the high and sold at the low. Don't do it. Stop hurting yourself. If you're in a position to take it, you're doing risky bets and you're losing money, please just put your cash into to Curve or Aave. Just put cash. And unless you have a reason to believe a position is going to be lucrative, and especially if you're losing capital, it's time to be different. Stop losing capital. Chet's in the house. Always a pleasure, my brother. Todd, non-fungible yearn, staking yield wrapped in mint NFT. Okay, well, you caught my fancy. Woo! Okay, yeah, I don't have much time to look into it, but NFY, I'm going to try and remember. Yearn is everything. Those boys are brilliant. Um, it's a big deal, and things are going to change really quickly after March May 5th. Some serious architectural and infrastructure changes are going down in DeFi. And it's going to, guess what? It's going to start the entire cycle over because it's going to propagate throughout Ethereum. It'll propagate over to BSC eventually. And everything is brand new on Matic. So we got some serious infrastructure going on. And monetary velocity is going to go fucking apeshit because there's opportunity which drives capital flow, and capital flow affects emotions. And it's really interesting. Very interesting. So stop taking risks and stop making mistakes. And if you have to throw your cash into Aave until you figure things out or you talk to more people, do it. So if you're losing capital, it's time to stop and then do things different and do things better. But what do you do with a 50K bag as a novice? That is basically asking me for a book. What would I do? Here, this is a great answer to this question. Sell everything and put it into dollars and put it onto Aave and then go from there. Because if you have 50K, you may make a lot of money, turn 50K into a half a mil, you're not going to know what to do with it. It's going to be in risk on assets. It's going to be in assets that aren't working and aren't performing. You need a strategy and you need experience. And you need to start small and slow. Aave is going to produce interest, yield, work, assets working for you. You got to understand and appreciate that's what you want. And then you could do yearn and get more in your capital. Then you could figure out what the hell Curve's doing. And then you could figure out what Convex is eventually doing. Then you could figure out what 50 different DeFi protocols are doing that could generate returns on your capital. And then when you turn 50K into 500K, then you'll be in a better position to keep the money. Because too many people buy assets and watch it go 10x, and they love the asset so much that they watch the 10x go away. And stop loving the asset. Now you have to ask yourself, and that's a hard question. That's a hard statement to make as well because people are so passionate about decentralization, and I agree, and I think the world needs to change, and I'm trying to change the world in my own way. But are you ready to lose money? Your hard-earned money? Because someone's going to take it. Digibyte goes to $1, someone's going to make a frickin' fortune selling it to people buying at 90 cents, buying at the dollar, and then it's going to go down. And then what happens? Someone bought that top. Someone bought the top and is going to sell the low. And that is brutal. It is emotionally devastating. Because Digibyte hits $1, it rips to $1, it's going to dip to 80 cents, and that's 20% of all or whatever money was applied. So I have a Digibyte position. It's 1% of my portfolio. I love decentralization. Who the hell wouldn't have a Digibyte position? It doesn't break me. It could be volatile as it wants. It could go up and down, left and right, sideways, whatever. If you want to prevent losing capital, watch your position sizing. So the whole rant is about position sizing. Digibyte's a wonderful asset. At some point, it's going to have to be sold because I can't put it to work. I can't get interest on it. I can't get yield. I can't lend it to someone who wants to borrow it so they could do speculation and take risk and pay me interest. So there's no purpose for it right now. And that's the biggest thing lacking for the Digibyte asset. Love it though. Love my Digibyte. So I'm cool with the Digibyte community. I'm just saying I love it. Okay? Talk to those boys as much as I can. Thoughts on Solana? Billy, here, if you want thoughts on Solana, look at Billy's post. Mark. So follow Mark, screenshot this, Lemnis Skate, and you'll see his Solana post, and that's my thoughts on Solana. Chet says, hit the likes button. 68 people in the stream, 42 likes. We're doing pretty good. We can do better. Why do you always recommend Aave over Curve? Because it's easy, and that's the first place people should head to get their taste and their feet wet. It's simpler. Curve is an intimidating user interface because of the nostalgia they went with. Aave is much more inviting. Just cast out my principal on 2 assets, now running on profit yield. Oh, that's how you do it, Peter. That's how you do it. Doing it different. Lukal, do you still see a bright future for Curve after UniV3 with his concentrated liquidity? That is a potential narrative change. So my eyes are on. It's irrelevant because of my VE Curve position, and I think Curve has a capacity, an intellectual capacity, skill set, technical capacity to adapt, overcome, and improvise. Those are some of the smartest people on the planet working at Curve. CRX, cheaper fees due to less complex contracts on Aave, so Aave is more liquid and doesn't require understanding of boost like on Curve. You got it, spot on. RenDGB, which has no liquidity at all, and there's no capacity to lend or borrow. There's no Aave integration. It's basically illiquid. Stagnant equity is a technical way to put it. Ryan, what percent of a portfolio would you solo stake Ethereum 2.0? So my opinion on Ethereum 2.0 is 32 ETH. It's kind of what Chico Crypto talks about. Some people are speculating to a larger extent, but I think 32 ETH is a nice goal to pursue because it has significant systemic meaning. In theory, it's a bond, and you could stake your 32 ETH, and in a couple of years, if Ethereum is extremely deflationary, you could be producing a significant amount of income merely by having Ethereum, putting your capital to work. You're welcome, Bukal. You're very welcome. Chat, can you put the Discord link on the chat? Yeah, right here, profile. Got a lot of people in the Discord. It's getting hot lately, guys. Noah's Real Talk. What's the percent ROI on Aave? Aave and Ethereum is currently less than 10%. But if you go to Aave on Polygon, you're talking about 21% on USDT. And if you go to Curve on Polygon, you're talking about 45% on dollars. 45% return on your dollars. Now, obviously, this isn't going to last. It's a limited supply of Matic that was applied to the position, and also it's being diluted. And obviously, as the price appreciates, this percent will go up, and more liquidity enters. It's going to go down. But this is crazy. Also, 9.86% of the base APY. Guys, that's monetary velocity 101. There's some serious churn of capital going on Matic. You got $173 million churning. 11.39% of that capital is churning, and transaction fees are being generated. It's very serious. I'm very serious. I'm not speaking hyperbolic. I'm not speaking like to the moon type serious, but I am speaking serious with regard to technical properties. This is really meaning systemic infrastructure. Right up there, Joe. I put the Discord link. I'll put it again, my friend. All right, let's wrap it up. Thursday, 12:27 p.m., April 29th. Discord's available. My office hours is a bit sporadic. I got a lot of family stuff going on. I got work to do for some corporations. But Discord's pretty hot, and there's always someone available to help you. And they're all really rational, and there's really good people that are coming together, all wanting to be different. And if you're different results will be achieved. So I thank everyone for joining. 74 people in the stream, 46 likes. We can do better. Tell everyone to subscribe. I wish you all a wonderful day, and I will see you tomorrow. Peace.